Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Let's see how this Q4 earnings season is shaping up, shall we, with our research director, Shiraz Mian, who joins me now. Shiraz, earnings look to be on track to turn in a third consecutive quarter of declines. That means the earnings recession continues. Is that really the big story here?
Yes, that is, because growth has been a challenge. That has been the concern in the market as a whole, and the earnings recession, negative earnings growth, third quarter in a row, really magnifies and spotlights this issue for market participants. So yes, that is the big deal.
And besides China and oil, any other major headwinds?
Those are the big issues. Oil, obviously, a major sector, has fallen on harder times. China, it shows the growth issues that we have all been dealing with, not just China, but the emerging markets and the rest of the world too. On top of that, you have the strong US dollar, and then questions about the sustainability of margins. The improving labor market is good for the economy, but the flip side of that is margin pressures. So that's a factor as well.
And weather, maybe from that major snowstorm that hit the eastern seaboard, won't show up till Q1?
I would suspect that some retailers, since they come later in the reporting cycle, and their fiscal Q4 runs through the end of January, we will hear from those guys because they're always looking for an opportunity to find an excuse. I would suspect that will be something they'll talk about.
All right, run down the scorecard.
Okay, I have a couple of slides to share with folks here. So as of this morning, we have 92 S&P 500 companies have reported results. That's about a quarter of the index's total market cap. So a fairly decent sample size. Total earnings are down 1.4% on 1.8% lower revenues. 73.9% are beating earnings. 45.7% are beating revenues. Excluding finance, the growth rate becomes even weaker. Here is the total scorecard. Just two sectors that haven't reported any results yet, autos and utilities.
And this morning, by the way, is Tuesday, the 26th of January.
That's right.
That's when we're talking about this.
Yes, we haven't seen the Apple report yet.
Yes.
That'll be coming later today. And just to put the results thus far into a proper context, this chart compares the growth rates and the beat ratios for these 92 index members with what we had seen from these same companies in the previous quarter, meaning 2015 Q3, and then the four-quarter average, meaning the 4 quarters that run through 2015 Q3. And the growth numbers, as we discussed at the top too, they are horrendous. Nothing really to look in there. But the beat ratios are a bit interesting because as you could see, companies are beating EPS estimates at a ratio higher than the recent past. And the revenue beat ratios are not as ugly. They're still on the weak side, but they are not as ugly as we had seen in Q3.
That's interesting. Up to now, correct me if I'm wrong, there really haven't been any reports that have moved the stock market. You mentioned Apple. Might that be one?
Yes, Apple, the growth issue is with Apple too. The estimates put them kind of at a flat earnings relative to the same period last year. But the China issue has become a big deal for Apple, and it'll be interesting of how they describe the ground reality in China. There is this narrative emerging about China that the consumer side of the Chinese economy is doing a lot better, and Apple and its products have become kind of a status symbol for this emerging middle class that have more purchase power, and so it'll be interesting, yes.
Let's talk sectors here, shall we? You've identified 3 sectors for Q4 that should show positive earnings growth. Which are they?
Yes. Let me give a summary picture for Q4 as a whole, and by summary I mean Combining the 92 that have reported versus the 400 plus that still have to report. So total earnings would be down 6.5% in Q4 on 4.7% lower revenues. And as folks can see in this summary table, three sectors are in the positive. So finance, there's transportation, and there's medical. Okay. Finance has a pretty strong growth, double digit, 10.6% earnings growth in Q4. A big part of that is easy comparisons at Citigroup. Citigroup had taken a big bath in the fourth quarter of 2014, so they have a roughly $3 billion swing in profitability. Exclude that, and finance isn't that impressive then. Transportation is good. That's the flip side of what's happening to the energy industry. And in transportation, the airlines are doing a lot better, jet fuel being such a big deal for them. And those gains are partly getting offset by weakness in the railroads. And railroads are more tied to the commodities and coal transportation and also in the manufacturing. And healthcare has been a positive sector for a while.
All right, so which are the majorly negative sectors?
Oh, but you can just throw a dart and they're all negative.
Okay.
So we have 12 of the 16 are in the negative. Oil, obviously, we mentioned that already, but the other economically sensitive ones, basic materials, industrials, pretty much all of them, as you could see here, they're doing pretty bad. So 12 of the 16 have negative earnings growth in Q4.
So let's look out to Q1. Any better picture?
No, it's not getting any better. In fact, I do have a slide to share here. And here we see that Q4 is on track for a 6.5% earnings decline. And as you could see here, Q1, even though we have seen results from only 92 companies, and only 92 companies have given us their outlook for Q1, estimates for Q1 are really coming down at an accelerated pace. So earnings for Q1 are now expected to be down 4.3%, and they're expected to be down 1.3% in Q2 as well. So the first half of 2016, growth has effectively evaporated, and a big part of that is obviously the oil, but I wanted to share the same slide on an ex-oil basis as well. Okay. And you would see that there's not much happening on an ex-oil basis either. So a modestly down earnings growth, negative earnings growth in Q4, effectively flat in Q1, and just barely in the positive in Q2. So we have 3 back-to-back quarters of negative earnings growth, and the outlook isn't improving for the current or the coming quarters either.
All right. Well, we are going to, as we progress through the earnings season, keep track of what you're thinking about what's going on. And besides these videos, you can always read Shiraz's commentary on Zacks.com. He does an earnings preview generally on Mondays, and then as the week progresses, an earnings outlook written commentary, as well as his Ahead of Wall Street column on our website. And there is where he talks about all of the daily nuance changes as earnings season progresses, particularly in the peak periods of earnings season. All of that and more on Zacks.com. With Shiraz, I'm Terry Ruffalo.